This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me always is Robb Reinhold.
Hey everybody, this is Robb Reinhold with Maverick Currencies. I've been trading since 1997 professionally, and I jumped into Forex in 2007. Absolutely love Forex trading and added Bitcoin and other cryptos as well.
I don't know if you guys knew this, but Maverick Currencies also has their own YouTube channel. We link it down below on every episode. You can go right to it. Robb, tell us what you can find on that channel.
Our YouTube channel is really new. And for years, people told us, you got to get on YouTube. And we just did our own thing with our own traders. And we started to release a few things and really liked the response that we got. So we started to release some more things. So we are now releasing some of our market commentary videos. Every week we produce 5 videos about current market commentary and current market trades. We do one on the weekend called the Currency Room. And then Wednesday we do another session. It's about an hour long where we go through the current market and we update everything we talked about over that weekend session. And then daily on Monday, Tuesday, and Thursday, we release about a 10 to 20 minute, here's what happened today, here are the pairs we're looking for, here's what you can look to expect over the next 24 hours, these are the news events you got to watch out for. So it's really current commentary for people who are trading cryptocurrency and Forex.
Nice. And so if you are a fan of Robb and you want more material, there's plenty more out there, and it is all free on the Maverick Currencies YouTube channel.
And you'll get to meet our many other members of our staff that help us produce that content.
Great staff, by the way, too. We have moved on to episode 8 in this fine podcast, and this is a subject that plagues everybody at some point, and it's something I've actually done a podcast episode on a long time ago, back in the early days of the Forex Q&A podcast. But it needs more attention, and it needs a little more elaboration, a little more clarity, and a little more action. And so we're going to be talking about that today, and the topic is how to deal with slumps, how to deal with short-term losing streaks. The way I define this is it's more short-term. You have maybe not 2 or 3 losses in a row, because that happens all the time, but something like 5 losses in a row. Or let's say you go 2 for 9 in terms of wins, like 2 wins, 7 losses in a 9 trade block. What does that do to somebody? Because we've all been there. We all know what it does to us. Moments like this give you the highest levels of temptation to deviate from what you're actually supposed to be doing. Let's go ahead and drill down into this a little more. Robb, start us off here. How should we kind of approach this from a top-down outlook?
I think you gave a pretty good example of what a slump is. It's basically a period of time where your system produces less results than you were expecting. And that could be multiple losers in a row. That could be just a few winners over a large group of losers. But it's basically any period of time where you just feel like, okay, my results are not what I expected. It's not what all my hard work went into to produce these kind of results. And as Patrick said, this is when you are ripe for messing it up. This is when everything in your brain is working against you. All the chemicals are swirling around and you're doubting everything and you're doubting yourself. These are the moments where you are the most likely to screw up the psychology part of this whole trading experience that we have. So that's really why we wanted to do this episode, is to basically help you prepare. This will happen. This absolutely will happen. And if you're in a slump buster is not the answer. We're going to give you some things to work on.
And just to show how normal this is, it's the top earning traders in the world go through this too. It's super, super normal. And Robb actually has a chart explaining just how normal this is.
Well, it's just not normal. It's statistically guaranteed. So if you want to call that normal, okay, that is normal. It's statistically guaranteed that you will have a slump. Let's take a look at this chart. On the left, you have your win percentage. And on the bottom, you have your consecutive number of losing trades. So you simply say, okay, what is my win-loss percentage? So let's say you go to a 50% win-loss percentage. And then you go along that line and it says, okay, what are the statistical odds that in the next 50 trades, you're going to have 2 losers in a row. It's 100%. The next one, what are the odds you're going to have 3 losers in a row? Let's just call 99.8% 100%. What are the odds you're going to have 4 losers in a row? It's 95%. And so look at this. This is the statistical numbers. So if you think you are so smart and your system is so great, and you say, I'm not going to have 4 losers in a row, what's your win-loss? 50%. Yeah, you are. You absolutely will. What are the odds of 5? 75%. What are the odds of 6 losers in a row? 50%. You have to expect this. This isn't anyone's opinion. This isn't my opinion. This is not Patrick's opinion. This is the cold, hard numbers. Statistical probabilities say you've got about a 50% chance to have 6 losers in a row somewhere within a 50 trade period. You better plan for that, because if you don't, you will be so shocked when it happens. But by using this chart, and we show this chart early on to all of our traders, look, you better start working on this because it is statistically guaranteed to happen. What are the odds of 7 in a row? 29.2%. What are the odds of 8 in a row? 15.5%. 8 in a row. Now, a lot of you just can't even fathom that. Like, oh my gosh. Can you imagine if you made a group of trades and you had 8 losers in a row? At that moment, how do you think you would feel? I always use that because that's what you're going to be dealing with. At that moment, you will not be dealing with logic and reason. You will not be using your prefrontal cortex for anything you're doing in trading. You're going to be using your insula and other parts of the brain that deal in fear and fight and flight responses. Patrick, have you seen this before in people?
Yeah, I've seen it myself. You know, I think that's why I make such good trading psychology content, because I've gone through all of this. You know, I'm not talking about things I don't know or I haven't experienced. I can't remember if it was 7 or 8 losses, but I definitely had that in a row at one time. Now, the only thing that I think saved me from going insane at that point is it came after a really nice run of good trades. So it didn't put me in a hole. It just erased a lot of really good prosperity I had before that. So I was bummed for sure, because I'm like, man, it's like a month or two of trades all down the drain because of this losing streak. So that sucked. But I can only imagine if I was starting out and I just put real money in for the first time, and then that just happened to be the moment where I hit this losing streak. Yeah, I don't know what I would do. I haven't been there myself.
Here's the sad thing is some poor soul pulled that short straw and it really messed with them.
Yeah, I mean, this is the type of stuff you just don't come back from.
This chart can be downloaded in the link below the video. If you are listening to this outside of YouTube, you can go to maverickcurrencies.com/odds, ODDS, and you can download a copy of this here. And we want you to go through and take a look at what is the statistical probabilities. Now, we've color-coded these in this white area. This is where it's most likely going to happen, but it's not going to be common. The red area is, oh, it's going to happen all the time. You better be ready for it. The blue area is where, hey, it's still going to happen, but it's significantly lower odds and very statistically small probabilities. But it still will happen. You'll see you have 0.1% of the time, 0.4% of the time. You do have to account for these. Now, I love this chart because anyone who still has it in their brain that this isn't going to happen to them, I show them this chart and they say, oh crap, it's coming.
Yeah, and I want to add in one thing too. I do get people ask me sometimes saying, well, you know, if money management and trading psychology is of such utmost importance, why am I doing all this work on technical analysis? This clearly takes the most work. I say, well, because if you can take a 50-50 trader and add percentage points on little by little, it really does make a big difference. And I really had no way to illustrate that except just by maybe saying, you know, what could that do over time, you know, year over year, you know, if you're trading different markets, things like that. You know, it's significant. But I think this right here, in one way, shows just how significant that can be and why we work so hard to eliminate losses on this channel. But like the chart shows, it's still going to come.
That is the point of this podcast. Well, the first point was to show you and prove to you that is coming. The next part is going to prepare you for when it does happen. What are you supposed to do?
Everybody, at least who listens to this channel, puts together a system and back tests it heavily. Now, the problem is when you start forward testing it, there's always going to be a natural drop off for a number of reasons. One, you can't take every trade that you could back when you back tested, but also when you were back testing, emotions never came into play, and now they do. This is what you ultimately want, is to get results as close to your back testing as you can possibly get, because it was really good. That's why you're going with this system in the first place. Some of these issues can be system related. Some of these issues can be non-system related.
People who do back testing, they have a treasure trove of data. And I know that we go and look at it for win-loss percentage, profit factor, but understand in that data, you also have a record of the slumps that have happened during your system. I want everyone to, the very first step, we gave you that chart that you can download, take a look at it, but even better, that's just, hey, these are just general numbers. Let's go back and take a look at your backtesting results. You should be able to go back and find the period of time that did the worst. Okay, there was about a month and a half long where I took 15 trades and only made money on 3. You should then say, okay, that is very highly likely to happen again, and it actually might be even a little bit worse than that. Then you can start to really prepare your mind for, this is coming. What do I do when this comes? How am I going to handle it? Because as we said earlier, at that moment, that is the most dangerous moment for a trader, because they are no longer using logic and reason. Their brain activity is all in the wrong spots. So you have to be at least aware, self-aware, that there are going to be psychological issues. So the very first thing we want you to do, if you see a slump, if you have a period of time where you say, hey, over the last 3 weeks, I just haven't been able to get anything right, the first thing you need to do is stop. Now, that doesn't mean stop trading. What it means is you just need to okay, it's time for a deep analysis here. The first thing I want you to do is make sure that you aren't the reason for the slump. That is really a very common thing that I see, and it's something that I deal with our traders. And when I have a trader who's had very predictable results, doing really well for a long period of time, and then all of a sudden they're wild and erratic, I call them up, I get on the phone with them, and they know why I'm calling. They know. They want to start talking about trading. I said, hold on. Before we get into trading, is there anything going on in your personal life? And they always just pause, and they said, how did you know? I'm going through a really ugly divorce right now. Yeah, I know, because this isn't you. You're behaving different. This thing that's happening in your life is making it very difficult. I've talked to traders that are having health problems. I have traders that are having money problems. These are the things that can cause them to deviate from their system. So the very first thing that you need to do is you need to stop, really take a look at you and say, am I the problem? Are you staying out late, drinking too much? Are you not getting enough sleep? I mean, there's so many things that can sabotage this. Let's make sure that you aren't the problem.
And I want to take that one step further, Rob, and not just even external problems, but could these problems be internal as well? Could you have taken maybe 2 losses in a row, and now you have this mentality to where you're going to chase? And so you might start taking trades that your system really doesn't give you a clear green light on, but it was close and you really want to get that money back. And so you just start taking these little liberties here and there. Liberties, by the way, that did not happen when you were back testing. Sometimes those externals and internals can even combine, especially, you said money problems, especially if there's people out there having money problems. Then all sorts of weird things like desperation and insecurity start to kick in, to where once you're actually sitting down and trading, a whole host of things can start entering the fray that, once again, were not there when you were back testing. And those results, those great results that you got all excited about, are the results we're trying to get the closest to. Yet you're doing things that are pulling you further and further away from it.
And that taking liberties, I love that saying. You're taking liberties based on how you feel at the moment. That is something that we call a confirmation bias or even a recency bias, where you take things that have happened recently and all of a sudden you now change your mind on how to analyze data that you would have done a different thing 2 months ago. Because, hey, like you said, you took a couple losses in a row. Did that recency bias of what just happened to you cause you to act differently? You took 4 wins in a row. Did that recency bias cause you to say, hey, I'm going to double my position size this time because I'm hot? All these things are going to come into it. And another one is confirmation bias. Now, we're going to be doing an upcoming episode in the future on confirmation bias. And this is where who you are, the decisions that you've already made, are going to crop up in your decisions, and you're going to give yourself the ability to take these liberties. For example, let's say that I'm very bearish on the dollar. And let's say I think the whole US dollar is ready to crash. I think that the Fed is doing a terrible job. I think the dollar is just the worst thing ever. All of a sudden, I get a signal on my system that says, hey, it's time to buy dollar. Go long dollar yen. That confirmation bias, I've already built up the story in my mind that dollar's bad. When I look at the data is telling me to buy dollar. The problem is I've already predetermined that dollar's bad and going lower. And it's going to be very difficult to take that trade, and you may take liberties and skip that trade. Basically, anything you're doing that is not just following your system robotically is a problem.
Let's kind of move on from there, because I think there's a lot of people out there that think, at least maybe to this point, say, hey, okay, I understand that. That could certainly hinder my trading, especially during losing streaks when all of these emotions are heightened and magnified. But, life's going pretty good. I'm in a good place. I'm happy. I don't think I have any biases. I kind of understand that I just need to, put blinders on and follow my chart. Yet I'm still getting these losing streaks, and I did not expect this to occur. Where do we go from here?
Well, great question. You've looked into yourself. You've given yourself a very honest checklist of self-awareness of, okay, my personal life is good. I'm not staying out all night drinking. I'm in a good place. Money's okay. To where you've basically said, I'm not the problem. Once you can confidently say that you aren't doing anything different, you're not taking liberties, you're not changing the system, then we need to move into step number 2. Now, step number 2 is we're going to have to analyze the system. There's been a lot of times where I talk with traders that spend a lot of time analyzing systems. They say it's all ready to go. We plug it in, we put it in live market situations, and then 2 months later, they come in and say, Rob, this isn't working, this is broken. When you have your system that you've spent all this time developing, there are different types of systems. Some are trend following systems. Some are something like a reversal system, or some are more like a scalping system. So look, every system is going to be different. However, every system is going to perform a little bit better and a little bit worse in certain market conditions. For example, we had a long period of really weak, low trends back in 2019. Do you remember that, Patrick?
I certainly do.
There's nothing wrong with your system. Your system's great. It still might be a little bit profitable, but the underlying market just doesn't match it. What is a trader supposed to do in that situation?
So there's a couple things. First off, from a purely psychological standpoint, we alluded to this a little bit earlier in this episode. If you backtest with an automated system, with automated software, this should be even easier. You take 6 losses in a row, go back and see, did my system ever take 6 losses in a row? It probably did. Odds are that it's almost certainly did. So just understand that's just something that happens. You're going to have to find a way to absorb it. It's not something that should be a big surprise to you. It's not something that should be devastating to you. It should be something, as we talked about before, that is expected. All right, so that's the first thing. Now, if you find yourself, as we often have in the last, not 2022 really, but the 4 years before that, in an environment that might not really be friendly to, let's just say, a trend trading system like we do on No Nonsense Forex. I've made videos on this before, said, look, this is not the way we want to do things, but if it's going to be this way, we all trade the daily chart at No Nonsense Forex. We abide by that religiously. However, in certain situations, if you need to drop down a time frame, take a look at the 4-hour, maybe even take a look at the 1-hour and see, is this performing better in this particular environment that looks like it's clearly going to be around for a while. Maybe that's the move. Then you have to do a whole other set of testing to see if that's true before you get started, but you still have an outlet. If the environment itself is legitimately causing these losing streaks, and make sure that's the case, then you can still adjust down if you have to.
This is a very complex thing because when you make this decision, and this is something I've struggled with for many, many years because, look, certain systems work better in certain markets. That's just a fact. And so when you know that, you say, well, why don't I just pull out the right system at the right time? That sounds wonderful. You don't know it's not the right system until you put your system out there and find out, oh, I've had a long period of underperformance. And the worst thing to do is throw it all away at that moment and change the system. However, when you think about it theoretically, hey, if you could match up a system, like when the markets are trending strongly, have a trend trading system, and then all of a sudden at major trend reversal points, have a reversal system that you use, that would be wonderful. And I've tried that. I've actually tried to implement using different systems at different times. Here's the problem.
I bet it failed.
It failed because the decision I made was more emotional than technical. And that's the problem. And another problem is with trends, these trends might last. And let's say that I am in a trend trading system and it's going sideways for months and months and months. And I finally say, oh, it's never going to work again. The nature of trends is that they change eventually. And so a lot of times you're forced into these changes when the market is just about to turn and go your way. This is a very, very complex question here. I don't have a great answer because I think anything you do is very likely to be more emotional than logical.
So I think a solution we can both agree on, however, is that you've tested this. Think about when you back tested your system. What was that environment like? Was it also rather slow? Was it erratic? Your system should be built to withstand most situations. We're only talking about very extreme situations here, like we saw in 2019, for example. Your system that you took so long to build and test should do you right long-term, regardless of what's going on. So the answer, I think for most people, just about everybody really, is just to keep trading the system. It's eventually going to correct itself just like it did when you backtested. You just didn't see that occur when you backtested. All these things were going on. Your system is going through losing streaks, winning streaks, up markets, down markets, crazy markets, all of it. You just weren't there for it. So you just have to know that you should be able to get the results you're looking for if you just keep going. One of my worst things I ever did, and the reason I'm so loud about it is because this was probably my biggest weakness, is after losing streaks, I would stop. And then as soon as I stopped, here comes an amazing trade that would have erased all the losses I just took. But I wasn't there for it because I thought it would be right to quit. Because in my dumb head, I actually thought, oh, I just took 5 losses in a row. That must be it. I think every trade after this is just going to be a loser, right? And it's going to suck me all the way down to zero. I don't want that to happen. So, it's such an irrational thought. But again, this is what happens when emotions are heightened. And when you have losing streaks, emotions are heightened. So you think these crazy things. I guess my biggest takeaway is 99% of the time, you should just keep going. Stopping is probably not going to be the move. And I think soon after you stop, you're going to really regret it because I know I have.
Stopping is almost guaranteed to be an emotional reaction. So the real question about this, Patrick, is that we know these slumps are going to happen. They're guaranteed, statistically guaranteed. They're going to happen. And when they happen, they're going to put you under pressure, immense pressure to do something different. But if you don't do something different, you may not survive the slump because that's what this is about. It's so easy to trade when your trades are doing well, you're making money, you got a nice win-loss percentage, nice profit factor. Everything's great. It's so easy. It's when the market puts you under this pressure where trading gets hard. These periods are all about survival. It's not about making money. It's surviving. How do you survive these slumps? How do you get through the desert to the oasis where you don't die of thirst on the way? You really have to be very, very aware of this risk. One of the things we do at Maverick, and I agree with you, Patrick, stopping is the wrong thing to do. However, we do have rules where you can cut position sizing. Now, position sizing is just the volume of your trades. You turn up position sizing, your results get louder. You turn down position sizing, your results get smaller. So we do have rules where if there is a situation where your system isn't producing good results, not because, again, first step, make sure you're not screwing it up. If you're doing everything right and you look at your system and you say, you know what, this is just not the right market condition for my system. It's a trend following system and the market just isn't trending at the moment. We say it is okay to cut your position size down, do a half position, and then you can ramp that back up because it's about surviving. It's not about thriving. These periods when you're out in the desert, when nothing's going right, it's about how do you make it through the desert? And that's really what this whole episode is about, is get you through this desert. Because I tell you what, stopping is wrong. Now, unless in the first step, where you look at yourself, you realize you're doing the wrong stuff, stop. Stop trading immediately until you can get that figured out. If you've got personal issues that are causing you problems, stop trading. We do that with our traders. I say, hey, look, get through your divorce. Let's talk in a couple months. Let's just have you cool out for a bit. And when they come back, they say, that was the best thing you could have done for me, Rob. Thank you. What do you think about cutting that position sizing, Patrick?
I'm actually really glad you mentioned that because that's something I didn't mention a little bit ago, but I did mention it in my dead markets video, is that apart from dropping down to a lower time frame, what I would rather you do first is cut the position sizing down. You know, if there's less of a chance because of the market, and I just don't mean like what's going on in a week or two. I mean like this is just how it is now. We actually have tools that show you what kind of environment we're in. If those tools are telling you that it's really bad, then the chances of you winning have gone down. So as a result, you need to drop that position sizing because you're right. If you're in a desert, you got to make it to the oasis. You got to keep going forward, but you can't die on the way. You know, so how do you do that? And so that was the best situation I've come up with for myself and my traders was to keep trading, but to scale back a little bit on the way you do it, out deviating from the system that you know long-term is going to get you where you need to go. So I do like the combination of those two things.
Yeah, and like you said, this is just about surviving this patch because you've done the work, you've done the back testing, you've done all the right stuff. You just got to get through this slump. So let's go back through these to wrap this up. When you're in a slump, number one is to take a hard look at you. Are you the problem? Are you trading your opinion? Hey, I think dollar is going to go up. Well, that's your opinion. What if the chart's going down and you're only taking short dollar trades? You're going to really lose on that. If you're causing your system to fail, you need to stop trading until you fix that. Because if you keep doing that, your system's not even a system anymore. It's just you being emotional. Save your money, go back to the drawing board and figure it out. If you can honestly say it's not you, then you need to look at your system and say, okay, I need to get through this period. Is this period of time conducive to my system? And if the answer is no, then you say, okay, I need to keep going. That was a great analogy, Patrick. You're in the desert. You got to keep moving forward. I'm going to keep going, but I'm going to do some things to make this period of time less dangerous to me. Cutting position size, but make it through that weak patch.
And then 3, if none of those situations are occurring, if everything's going just fine in your life and that's not getting your way, if the market itself isn't getting in your way, and you just happen to be taking a string of losses, then just keep going. It should correct itself over time. Allow this thing to correct itself over a long period of time because that's exactly what happened on the back test. You know, we're just going through that period now. It's natural. Rob showed you the chart. It's going to happen no matter what. So just allow it to happen and allow everything else to play itself out. If you've done the work and you stick to it, everything should be good in the end.
Keep swinging. You have to keep swinging. One last little bit I want to share with you before we let you go. I have a trader. He's awesome. He's very disciplined. He never screws it up himself. This guy is a machine. He runs a moving average on his account value. And whenever his moving average gets 10% or lower below his account value line, he starts to increase his position sizing. Now, what that means is his system has been doing worse than he is expected over a period of time. So he's probably in a slump. So what he actually does is he actually increases his position size during his bottom of his slumps. So when he comes back out of it, because like I said, this guy's a machine, he's not screwing it up, he comes out of it much quicker. He does the same thing on the reverse. When he gets too far above his account value line, then he actually starts to reduce his position size because he knows he's had better results than he statistically should have. So he starts cutting position size because he knows a slump is coming. That's just how numbers work. I'm not saying go out and do that, but I love the concept because that's someone who believes so much in their system that when they have a slump, most people are ready to quit. Most people are cutting position size. This guy, he increases it. I love it. It's a great way to think as a pro.
That is a gangster approach to everything, but I would tell everybody to not do that. So that's some really advanced stuff right there. Just keep it consistent, keep your 2% or whatever your position sizing is, and just fight through it. But yeah, there's a takeaway there. You know, that just shows that things do correct themselves. The more losses you take, the more anomalous it is. So you know, almost always right around the corner, that next big run. That's been my experience.
Quitting at the bottom is the worst thing you can do.
All right, so that will, I think we've covered everything, haven't we, Rob? Pretty much top to bottom, the issues, what might be causing it, and then ways to fix it.
Yeah, the points we want to get across, it's going to happen. Plan on it. When it happens, do a deep dive. Figure it all out. If it's all good, keep swinging. Keep swinging. You did all the work. You backtested it. You put the system together. Trust in the system. You did it. Keep swinging.
And on that note, we'll be wrapping up episode 8. If you like this episode, stay tuned for episode 9, where we talk about what happens when these losing streaks extend for much longer periods of time. That's a whole other mindset. That's a whole other problem, and it's a whole other solution, or is it? Stay tuned for episode 9. And thank you all for joining us here on the Trading Psychology Podcast. This is VP. Thanks for joining. Thank you, Rob.
Thank you, everybody.
We'll see you next week.